we go. Perfect. Welcome to the call, guys. Welcome to the call. Appreciate y'all for taking time to hop on tonight's training. Tonight's call is a Forex basics course. Now, what I want everyone to understand, okay, because we're going to go through a lot tonight. I'm going to go pretty slow. And if you've been here a while, this may be a boring call for you, but guess what? It's nothing like, really mastering the foundation, mastering the fundamentals. If you're new, this is a perfect call for you. Grab your pen, grab your paper. You're going to want to take some notes. You're going to want to write some terms down, because here's what's going to happen. Throughout this call, there's going to be some things that we're going to discuss that on this call, you may not 100% get it. Write it down though, so you can know some topics to study. You can reach out in the groups and say, hey, I don't understand this particular thing. Now we can help you, okay? See, I want everyone to understand that going forward, we're going to be focused on the skill. We're going to be focused on the education. Are we building the business? Absolutely. Are we sharing the information? Absolutely. But our main goal, at least my main goal, is to make sure that everyone who's a part of the organization, that you understand, the foundation of the skill set so that you can be successful. Guys, if you don't understand the foundation, it's going to be hard for you to really learn how to trade. Because if you don't understand basic stuff, you can't just skip it and think, okay, I'm eventually, no, it's like building a house. If your foundation is weak, if you build a foundation on sand, a house on sand, what happens? It's going to get washed away. The same thing happens here in trading, in this skill. If your foundation is not strong, guys, okay, it's going to be tough for you to get it. And what's going to end up happening is 2 months from now, 6 months from now, 12 months from now, you're going to feel really overwhelmed and really frustrated, because you're going to be like, why is this not clicking? It's because you don't understand the foundation. So I want this to be interactive tonight, because I want to make sure that certain things you leave this call understanding and knowing, okay? So feel free to use the chat. If you've got questions, raise your hand in the chat, drop it in the chat. I'm going to be checking the chat so we can make sure that everyone leaves here with clarity, okay? So what I want, our term for the month, okay, is clarity, understanding, okay? Clarity and understanding. That's the goal. If things aren't clear and you don't understand, you've got to say something. Because if you don't understand, we don't know you don't understand. So we're going to keep building on a foundation that you may not have. Does that make sense to everyone so far? Okay, use the chat. If you're following me, and I'm going to ask a lot of questions, I got to make sure y'all awake. And I also have to make sure that you guys are getting it, okay? So if you're following me so far, okay, if you understand that our focus isn't how fast we can go, how advanced we can get, is making sure that we have the foundation. Because in this academy, we have the best educators, we have the best strategies, we have the best software and tools. But we got to make sure that in order for you to be able to use those software, in order for you to be able to follow along with the educators, you have to have some foundation. Okay. So if that makes sense, if you guys are following me, drop some ones in the chat, because I got to make sure the chat working, because ain't no one saying nothing. Okay, cool. Shouts out to Denise. She's the first one to drop some ones in the chat. All right. Awesome sauce. Awesome sauce. So we're going to start from the beginning. Okay. Now, before I even dive into the actual training, because we're going to go over a couple of topics that I want to start with, I want to make sure that everyone understands what this academy is about. This academy is here to teach you how to trade, how to invest in whatever curriculum you're in. So even though I'm calling this training the Forex basics, this applies to everything. This is foundational. This is you need to understand this to do DCX, to do HFX, to do FRX. The only thing that you don't need none of this for is ECX. But any style of trading that you're going to use, this is the foundation. So the first thing, before we even dive into pips and lot size and all of that stuff, we got to talk about the first thing that's required to be successful in anything, not just in trading, but in life, and that's mindset. Okay? Mindset is the #1 most important part of trading. Trading is 90% mental. It's only 10% skill. Okay, 90% emotional IQ, 90%, trading psychology is how it's your mindset towards the skill. It's only 10% how to really press the buttons, guys. Like once you understand how to count pips, once you understand how to calculate your lot size, once you start to understand how to analyze those charts, that's the easy part. The hard part is closing a trade if it's going in the wrong direction, or not closing the trade because you're impatient. It's the emotions that get us messed up when we're trading. So there's a couple things, 5 tips, okay, before we dive into the meat and potatoes. 5 tips I want everyone to write down. And I want this to be like your 5 commandments of trading. The first thing is you have to trade with a positive attitude. You have to trade with a positive attitude. What do I mean? You cannot get into a trade saying, man, I hope I don't lose. Guys, wrong attitude, okay? Wrong attitude. You got to dive into the trade with, listen, the trade is hitting TP. I'm going to be profitable. Because what you focus on, you expand. Your energy attracts your results. So just like how you're believing for your goal, you're believing for the car you want, the house you want, the rank you want, you got to believe the same way when it comes to trading, your attitude, okay? You've got to have a positive mental attitude when you're trading. If you are in a bad mood, if things aren't going good with you at work or in your relationship, don't get on the charts because it's going to play out in the charts. It's not going to end well. Anyone ever been having a bad day and it seems like stuff just keep getting worse throughout the day, right? It's like you're getting a downward spiral. When you're feeling that way, do not get on the charts. Just don't trade that day. Skip today, okay? So you got to trade with a positive attitude. 2, no revenge trading. If you don't know what revenge trading is, I promise you, within 7 days of trading, you will know what that is. Just write it in your notes for now. No revenge trading. That means that if you're in a trade and you lose money, do not hop back in trying to get your money back. You will lose more. I promise you. Okay, I promise you. Not asking, that's a fact. So no revenge trading. 3, you got to practice gratitude. So that's something we're supposed to be doing in our life anyway, practicing gratitude, being in a state of gratefulness. You gotta let that transcend or transfer to the charts as well. You know, I'm so happy and grateful now. I'm in a position to actually have a skill that can make money from my phone. I just gotta master it, right? You gotta feel that. You gotta feel that emotion. Okay, you gotta be in a positive state when you're trading. The 4th thing is you've got to learn patience. Patience. Trading is 80% waiting, 20% actually pressing buttons. Most of the time, you're just being patient, waiting on the right setup, waiting on price to do the right thing for you to enter. You're going to spend more time just waiting for a trade to happen than actually trading. If all day, guys, you in and out of trades, you're doing it wrong. Okay, that's a rookie mistake. I've been there though. I used to be on my MetaTrader 4 all day, but you better believe I was losing money all day too. Okay, you got to learn patience. And the 5th thing, guys, is you've got to practice discipline. Something Dr. Calhoun said, he said, discipline equals freedom. If you can learn to be disciplined, you can get everything your heart desires. Think about it. If you could just be disciplined with saving money, you could save towards your goals. If you could be disciplined with your trading plan when you're trading, you will make money. If you could be disciplined with what you're eating, you will lose weight, right? Discipline is required for everything. Nothing's different here. So those are the 5 tips, okay? Just the mindset of trading. And guys, I want you to get intentional about studying, like trading psychology. Like sometimes when you chilling, y'all know how we talk about having a personal development regimen, like listening to audios, reading books, all that stuff. I want you to add into your regimen, like you've got to study the craft. If you wanted to be a professional basketball player, I'm sure you'd spend time studying basketball. Like you won't just be on the court all day dribbling the ball. You're going to go watch some pros. You're going to watch the tape, right? Watch the film. Coach could tell me if that's the right terminology, right? You're going to watch some film. You got to study the craft. If you want to be a pilot, you got to study the craft. You want to be a trader, you got to study the craft. Okay. So I want you to just accept that. Like if I'm going to be good at this, I'm going to have to study the craft. It's not going to happen accidentally. You're not going to intentionally have accidentally have $100,000 day trading one day. You're not just going to get lucky. Or if you have that mentality, you might as well just go to 7-Eleven and get some scratch offs. Okay. You might as well just play the lotto because you're gambling. But this isn't a gamble. This is a skill, but you got to be willing to put the time into learning. Okay. So guys, let's go in this. Let's get into the foundation of this stuff. Okay. Now, like I said, this is super, super basic. All right. Who knows? And I'll make it, I'll make it a little interactive. So I'm just talking to you. I want us to talk to each other. But there's, a couple different trading sessions. Okay. the markets, the foreign exchange markets are open 24/5, right? 24 hours, 5 days a week. The cryptocurrency market is open 24/7. All right. So depending on what you're trading, you got to know when the markets are open. Okay. Now there's 4 different sessions, guys. Okay. There's London session, right? This is when like the UK, the European market is open. Now we're in different time zones. So when it's 9 o'clock in the morning, there is like 3 o'clock in the morning for us. Okay. So London session is like 3 a.m. to 12. Okay. 3 a.m. to 12 p.m. Then we also have New York session. So that's like the United States session, right? That's, 8 to 5. Okay. 8 to 5. Now with daylight savings just happening on Sunday, these hours might be skewed a little bit, maybe by an hour. Okay. But this is the general time frames of these sessions. So the New York session is 8 to 5. Then we have the Australian session. So if you're taking notes, guys, I know I'm talking, but this, and here's something. When I was like new, I would see them talking about this on the academy, and I'm like, trying to study London. Y'all, it ain't that important. You don't need to know the times, okay? You just need to know the times that the markets are open, and you guys just got to know what session you're in. Does that make sense? Because different pairs move more during different sessions, okay? So we have the Australian session, which is like 5 p.m. or 6 p.m. to about 2 a.m. Okay. Then we have the Asian session, which is 7 p.m. to like 4 a.m. Okay. Like Eastern time. So depending on where you're at, I'm a little biased because I'm in Eastern time. So all of my thinking is in Eastern time. Coach, you got to work them numbers out for Pacific time. Okay. Coach and AV if they're on the call. All right. So we just know that there's different trading sessions and different pairs move different trading sessions. So my mentality is this: figure out which session you're going to be able to trade during. Can you trade during all? Absolutely. But when we're new, or when you're really trying to master or study this, you can't trade all the sessions. Let's just keep it real. Jack of all trades, master of none. So like find a session that you could be consistent with. And that's kind of something that I want everyone to put in your mind just around this academy and this whole, process of learning this skill. Is find times that you can be consistent with. It doesn't have to be when Sophia's on. It's when works for you. I don't work a 9 to 5, so I can trade London session. That might not work for you because you may be at the office busy. So maybe, Australian session is better for you between 5 and 2 in the morning. Figure out what works for you and then be consistent with it. Okay. Consistency is the key. All right. So these are the sessions. During the different sessions, when they overlap, certain time sessions overlap, that's when it's the most movement in the markets, okay? And through experience, all of that stuff is going to make sense, all right? Now, the markets open, guys, Sunday at 5 p.m., depending on like daylight saving, it might be 6 p.m., but general idea, markets open at Sunday at 5 and it closed Friday at 5, okay? So a lot of times I see people saying, hey, I can't close my trade. I can't get in this trade. It's Friday, 7 p.m. Markets are closed. Unless you're trading what? What can you trade on the weekends? Based on what we talked about so far, what can we trade on weekends? Drop it in the chat. Crypto. Okay, good stuff. Crypto, okay? You can trade Bitcoin on the weekend. You can trade Ethereum on the weekend. If you're using like AltFi, and you can trade Solana, all of these cryptos you can trade on the weekend. But if you're trying to get in like USD, JPY, it's going to say market closed. So don't say, oh my God, my MetaTrader is broken. Why it ain't working? Markets are closed, okay? Weekends, Forex markets are closed. All right? Cool. Y'all follow me? Good stuff, good stuff. So now let's get to the fun stuff. Okay, let's get to the fun stuff. What are we trading? Like when we're trading Forex, when we're trading these assets, what are we really doing? Well, guys, think about it. Y'all can see my whiteboard, right? Is it the right way or is it opposite? It's the right way. Like, can y'all see? I'm writing cat. Can y'all see cat or y'all seeing it backwards?
Cat right.
Good.
Okay, cool. Oh, good. I bet. So, guys, in the markets, right? Actually, I'll actually bring it up. Yeah, I'll do it on the whiteboard first, and then I'll bring up the chart. So in the markets, we're trading a particular asset. So in Forex, we're trading currencies. In crypto, we're trading cryptocurrencies. You could also trade commodities like gold and silver and oil, right? If you guys, we trade indexes like US 30, S&P 500, NAS 100, okay? Just know that on the market, in the financial markets, we're able to trade different assets. Now, the markets are either going up or it's going down, okay? The markets are always moving, okay? It's always fluctuating. Now, what we're looking at when it's moving is the price of that particular asset. So let's just use, a water bottle for instance. So say we're trading water, H2O, okay? We're trading water. And let's say at this price point right here, water is $1. Then it goes up and water is $1.50. Then it comes back down here, back to $1. Now it comes up, but not as far up there. So maybe it's $1.25. Now it comes way down here. So now it's lower than the dollar. So now let's say it's 25 cents. Okay, it goes back up a little bit, ain't quite to the dollar. So let's say it's 50 cents. Do you guys understand? Price, it's the price of whatever it is that we're trading. It's moving up and down. Okay, that's all the little charts represent is the movement in price. Okay, so the markets, guys, moves in 3 directions. Who knows the three directions the market moves in? Drop it in the chat. Drop it in the chat for me. Okay, drop it in the chat. What directions does the market move? Love it. Up, down, sideways. Okay, the markets are either moving up, it's moving down, or it's moving sideways. Okay, guys, if the market is moving up, and this, I know this is super basic, y'all, but we got to go back to the foundation, right? If the markets are going up, put this in your notes, we're looking for buys. If the markets are going down, we're looking for potential sells. Okay, now I'm going to bring up a chart, and then we're going to kind of work into this thing. Okay, I'm no expert, I'm no educator. I'm just sharing with you guys what I've been able to learn through this amazing academy. And I just want to show you guys that if you really get serious about diving into the education, man, like this skill could really change your situation. Okay, you change your skill. Like today, this morning, went to the gym, placed a trade last night, marked up a chart last night, placed a trade. By the time I left the gym, I was at $300. I was like, man, this is golden. I didn't even make that up. I never used to make that at my job in a day, right? Because now I understand fundamentals, and I'm no expert. I just understand what I understand, but I understand that a lot of people aren't having that same results, aren't having that same success because they're missing the foundation, the fundamentals. Okay, so we're gonna go back to basics together. So let's bring up a chart. Drop a 1 in the chat if you can see the chart. I think Tao, if I'm saying that right, Tao, feel free to unmute yourself. I see your hands raised. If you got a question, let me know. It's all good. Or unless that's not intentional. If it is, just unmute and let me know. Okay, I see some 1s in the chat. So first thing, before I'm not assuming nothing on this call. Guys, in order to be able to look at charts or because these charts represent price action, the movement of the price in the financial markets. How do you look at these charts? You want to go to tradingview.com and create a free account. Okay, tradingview.com. All right, tradingview.com, and create a free account. That's going to allow you to have access to everything that's tradable, every instrument that's tradable in the market. Okay, so for our example right now, I'm just going to look at, let me remove this so I could clear everything off the chart. Boom. I'm looking at GBP JPY. Okay, that's just a specific pair I'm looking at right now. Boom. Totally clean chart. Okay, fundamentals, guys. Now on TradingView, each one of these candlesticks, these little rectangles are called candles, right? Every candle represents a certain amount of time. How do I know what amount of time it is? Do you see at the very top here? Okay, at the very top of my screen, where it says 1 minute, 3 minutes, 5 minutes, boom, right? 1 hour, 4 hour, daily. The D stands for daily, the W is week, the M is month, okay? This means right now the D is selected, means that every single one of these candlesticks represents one day. So this is right now, so this particular candlestick is current. This is the candle we're currently on. This would be, yesterday. Well, okay, so here's another thing to note. New candles open at 5 p.m. like every day, okay? So this is like tomorrow's candle, and this represented what happened today. But don't let that confuse you. Just know that this is where we are currently in time. This is the day before, the day before, the day before, the day before, the day before. Everyone follow me, okay? Y'all, I'm gonna use 7s to say, you got me, you following me? 9 means no, Sophie, I'm lost, okay? And I'm looking at the chat so that I can, make sure I see when someone's confused, so I can slow down or stop or repeat, all right? So these candlesticks just represent time. So this is showing us, so let's just look at, I like to just, isolate so we can make sure this thing is clear. I'm gonna draw a line right here, okay? Boom, just make it darker. Y'all, I gotta put my dog outside. He is making me go crazy, hang on. I'm sorry, guys. I don't know. Kids or dogs, I don't know. They all ahead. I'm playing now. Okay. So this horizontal line that I just drew, this vertical line that I drew, okay? I'm just drawing that so we can kind of look from here to the right, forward, so we can kind of have an idea. Based on just looking at this chart from this line here to where we currently are, okay? Is price going up or is price going down? Just looking at this in the last few days, which direction, based on what you're seeing right here, is price going? Okay, I see some ups. If you're on here, and guys, we family, okay? So our goal is to make sure everyone has what? Clarity and understanding. Everyone's saying up, and that's correct. If you're looking at this right now on this call and you're like, I don't see up, how y'all know that? Drop a 9 in the chat, okay? Drop a 9 in the chat because I want to make sure it's clear for everyone, okay? And like I said, as we're going through this stuff, if certain things don't make sense to you, it doesn't click, and maybe you might be shy. I don't want you to be shy, but if you are, write it on your sheet of paper, okay? Cool, love it, Jackie. It's a 9, it's not clear. So here's what we want to look. Always think about candles like this, guys. And the colors don't really matter. This is kind of default, okay? Whenever you see a green candle, that's a candle that we call it's bullish. It means it's moving in the up direction, okay? So here's something that confused me for a long time. So Jackie, don't feel bad. And I'm sure there's someone else on this call who just didn't say, okay? When you see a green candle, this basically means that price opened here to the bottom and it closed here. So green means the close is higher than the open, okay? So it opened here, it closed here, okay? So if it closed here and the next candle opened, this candle opened here, but whenever it's a bearish or a red candle, it closes below. So it opened here and it closed here. Then you just slide over. This candle opened here because it always opens where the last one closes. Does that make sense? So it opened here. It's a green candle, so you know it's going to close higher. It closed here, okay? It closed here. Now, as you can see here, y'all see? And I'm going really basic because I want y'all to see this. This closed here. Y'all notice that. Let me just draw a line. See, it closed here, but this candle here opened there. Y'all see how it's a gap? Normally, it's exactly the same. Do you guys see that? Normally, if a candle closes, it opens the exact same place. Closed here, opened the exact same place. Closed here, but this time it opened here. Do you see that? Yes or no? 7.
Yeah.
Okay. And this is for everyone. This ain't just for Jackie. Do y'all see that? Do y'all know why that happened? Do you know why there's a gap between here and here? Here's why there's a gap, because this was the weekend. I don't even have to look at this, and I know this was the close of Friday's candle, and this is the start of Sunday night's candle. And between Friday and Saturday, price moved, but the market was closed, so there's a gap. Okay, so when I, yes,
I'm sorry, one quick basic thing. What are you clicking to make that solid line?
okay, so those are just like tools and trading views. So over here on the toolbar in trading view, this line option, this second little option here, if you click this little arrow, these are your lines that you can make. So you can make a trend line, which is a diagonal line. You can make the horizontal line.
Okay.
You can make a vertical line.
Got it.
I just know the command. So you see how it has like it's option H. I just know that. So I'm just like almost like Control C and Control V to copy and paste instead of actually going to edit, copy, edit, paste. But this is where you find your tools. Guys, that's a great question, Lolita. So over here, guys, is your toolbar in Trading View. This is where you find all your tools. So if you need lines, you go here. Okay. Horizontal lines and like trend lines are going to be your friend when you start marking up charts. Okay. Here you got like some more advanced tools like the Fibonacci and different things. Here is where you can just draw shapes, rectangles. So say I wanted to draw a rectangle, I could just draw it with a rectangle tool. Okay. But the lines, you just go here, click the type of line you want, horizontal, boom. Where do I want to place my horizontal line? Right at the close of this candle. Boom, it's done. Go back, get my horizontal line again. And I want to put it here. Line is there. If I wanted to change the color, it's a toolbar right here. You just go here and go here. Okay. One of our platinum leaders, lovely Fade, she does a Trading View basics training. It normally is on Thursday nights. So you want to make sure, put that in your schedule so to make sure that you can hop on one of those calls. She goes through all of the tools and how to set up your, how to navigate Trading View. Okay. But that's a great question. Everyone clear so far? So always know if you see gaps, it means that that was the time that the market closed and reopened. So I knew that this is the close. Immediately when I saw a gap, I knew this was the weekend. This was yesterday's candle. And that makes sense because look, this was Sunday going into Monday. Now we're in Monday going into Tuesday. Okay. So whenever you see a green candle, so Jackie, green candle. So that means price closed here. Anytime you see a green candle, that means that the close is above the open. So it opened here and it closed up here. So because it closed here, the new candle opened the same place. Now it's pushing up. So we can see that price from here, it started down here, but now it's all the way up here. So from here to here is in the up direction. So it's safe to say that price went from here to here. That's up. Did that help, Jackie?
Yes. Oh my gosh, the light bulb went on.
Okay. So just always know that if you see a green candle, close is above open. If you see a red candle, it closes below where it opened. So that's just showing you the direction of the candlestick, the direction of the movement. Okay. So good stuff. All right. See, guys, small things could throw your foundation off and have you confused completely. And you're like, this just ain't making no sense to me. Right. So, but that's something now, write that on your notes, Jackie, of, okay, candlesticks. I need to do some studying on candlesticks because there's a ton of things in the academy. I'm a big believer. You use the academy, but you also use YouTube to drive home concepts that you're learning in the academy. Sometimes when you hear someone else teach it, it hits home different. Okay. So use your resources. All right. So it's safe to say that this is in the upward direction. That's on the daily time frame. So for the last 1, 2, 3, 4, 5, 6 days, price has been going up. All right. Now I'm going to box up this area. Okay. So this is the area we're looking at. This is the last 6 days. Now, if we drop down to the 4-hour time frame, before I even drop there, how many hours, and drop this in the chat, guys, how many hours are in a day? I know this is super basic, y'all, but I think it's needed. How many hours are in a day? 24 hours, okay? So if I'm about to drop down to the 4-hour time frame, which means that okay, so let me just, so 24 hours in a day. And if I wanted 4-hour intervals, what's 24 divided by 4? 6, right? So that means that for every day, if we drop down to the 4-hour time frame, we're going to get 6 candles for every day. Let's prove it. So I'm just going to look at right here. This particular candlestick, it's right now, it's represented as 1 candle. Y'all see that? Because that's 1 day. But when I go down to the 4-hour, we're going to see 6 different candles because each candle represents 4 hours of time. So 6 4-hour candles will give you a 24-hour time frame period. Is that clear to everybody? If it ain't, tell me, okay? So if I go to the 4-hour time frame, okay, and this ain't exactly 6. Let me. It ain't exactly, because if you can see, I'm snapped here. I want just this candlestick. Let me see if I can turn my snapping off. Oh, let's see if I can do it like this. No, it won't let me. See, this way I need lovely now, because I think I can turn snapping off so that I can move this. Let's just go down. Hold on. Let's see. Boom. To the 4-hour. Okay. So as you can see, this is the same amount of time, because this is the blue box I drew. But of course, we have more than 6 because I had half of the first candle and half of the other candle. Okay. But let's see. So let's just get to 6. Let's see if that's 1. Hold on, let me bring it over. Okay. So boom. Okay, so this should be it here. Let's see. 1, 2, 3, 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Okay, so look. 1, 2, 3, 4, 5, 6. So that 1 candlestick we just saw that was represented by the daily time frame, when I dropped it down to the 4-hour, it now shows up as 6 different candles. So what does that do? When you go down in more detail on a time frame, you see more detail. So you've got to look at it like, when you look at the daily, look at that. If you just saw this candle on the daily, it just looks like price. Let me move this because I think it's confusing y'all. If we looked at this, it just looks like price. Remember, it opened here, came down a little, came up to here, and then it closed here. It just shows you like 1 box. But if we go down to the lower time frame, we can see now that more happened in that 6-hour period. Does that make sense to you guys? I'm just trying to show you that the lower the time frame, the more detail you get. The higher the time frame, the less detail you get. Okay, so let's talk about it. So remember, we already said that price was moving in the up direction. We said that. We all agreed on that. Now, because we're down on the 4-hour, you see how there's way more candlesticks, but it's still going in the same direction. It's just more detail. Because now we can see that price came here, kind of played around in the same area. It dropped a little bit, and then it pushed up, right? It pushed up. So you can see price went like this, came down, and went up. Okay. Now, here's what I want to show you guys from down here, where this horizontal line is. If you look to the right, this number represents the price of that at that level. So I drew a horizontal line at the lowest point, which was right here. Now I just look right and see what that corresponds to. It corresponds to about 150.979. Do you guys see that? That's the price of GBP JPY right now. 150.7979. Do y'all follow me? Do you guys follow me?
My mommy said yes, mom.
Okay.
She listening.
All right, that's your mommy. Okay, tell mommy, say what's up, right? Okay, cool. So y'all say yes. So now let me ask a question. Price is currently here. Y'all see this? This is current price. Whatever is the last candlestick on the chart, that's where we are right now in time, in real time. So price is currently right here. What is the current price of GBP JPY right now? Just based on looking at the chart. I know it's moving, but y'all should be able to get like a general estimate. What's price right now?
154.03080. Is that it?
Yes. Boom. 154.080 right now, 08093. You see, it's moving because price is always moving. So I see some of you guys put 154. In trading, decimal places are critical. Okay. In trading, decimal places are critical. Y'all, I download, if any of y'all know how to take a virus off of Google Chrome on a Mac, help your girl out. I downloaded some type of spyware or malware, and now my browser keeps tripping. Okay, so if any of y'all got some skills, hit me after the call. So price right now is 1.5.103. So let's just do an example. Okay, let's just do an example right here. Current price, and I'll just use what it is right now. Okay, 154 to 115. Of course, it's going to be moving, but we're just going to use it as an example so we don't, you know, it's not ridiculous. So y'all see this, right? Current price, should I make it bigger? I know you got some people, some seasoned folk on the call. You know, your eyes might not be as good as mine. I'm playing with y'all. All right. Current price, right, guys, is 154.115. Okay. The price down here where I said was the lowest point is what? That lowest point that I sent was what? Someone drop it in the chat. Just by looking at the chart, what y'all see? Drop it in the chat for me. $150,979. Yes. Okay. So would you guys agree? Okay. Would you guys agree that from here to, let me just draw the line to make it easy, 115, right? Okay. So this is our lowest point. And I'm just showing you guys visually, just so when we do the math, it could kind of make sense to you all. This is our lowest point here. And this is our current price for our example. Okay. So from here, would you agree that just using common sense, from here to here, price moved? There's some distance. There's a difference between the 2 points. Yes or no? There's some difference, right? Price moved. It was here. Now it's up here. In trading, the difference between price is called pips. Okay. Pips is the difference between where price was and where price is. Does that make sense? So between here and here, price moved a certain amount of pips. That's what pips is. It's like steps. So if I was saying to you guys, I'm in Miami and we're in West Palm Beach, there's a difference between where Miami is and Palm Beach. There's a difference in miles. That's a distance. It's just measured in miles. In trading, there's a distance between where price was and where price is, but it's measured in pips. Does that make sense? Drop some sevens if that makes sense. So that's all pips is. Pips is just the difference between price, where price was and where price is. It moved. If price doesn't move, there's no pip difference, okay? But clearly it's very obvious that price moved from here to here. So now the question is, how do we calculate, okay? How do we calculate how many pips it moves? And then how do we understand what that means in trading terms and how does that equate to money? Does that make sense? All right. So like I said to everyone, okay, like I said, excuse me, decimals in trading is important. It's really, really important. Now, what's strange is I picked a pair that's abnormal. Okay. So I'm going to give you guys the harder one first, because this is like an abnormal pair than the other. So if y'all notice something, I'm just going to show you some GBP, the JPY pairs. You notice it only have 3 numbers behind the decimal. Okay. All right. Now, if you look at like another pair, like Euro USD, they have like 5 numbers behind the decimal. Okay. Most pairs have like 5 numbers behind the decimal, but JPY pairs only have 3 numbers. So we calculate pips a little different in this one. So like really, I should not have done this example because this is the outside of the norm one, but we're still gonna do it. Okay. So in JPY pairs, okay. I wonder if I want to do it like this. Guys, can I do something? I'm gonna come back to this, but let's just do the exact same thing on a regular pair. So I want y'all to get this. Okay. So let's just pretend. Okay, these are our 2 numbers this time. Okay. I'm gonna go to a regular pair because I want you to see what it usually looks like. So if we're doing the same thing here, our lowest point is 1.08500. Okay. And then our higher point or current price, let's do current price. You're going to do it like right about here. All right. Current price is 1.09728. Y'all follow me, right? We back on the same page. Y'all got me. I didn't lose you guys just by changing the pair. The numbers just changed because we're in a different pair. Y'all following me? If y'all follow me, drop some 7s. If I lost you completely, you're like, Sophie, what are you doing? Drop some 9s. Okay, I think y'all got it. I think y'all following me. Okay, so this is our lowest point down here. And this one here, we're going to call it our current price. Okay, boom. So once again, if this was our lowest point and this is current price, we can agree that price moved up, right? It moved from lower to higher. Yes. So at our lowest price, let's call it price to keep it consistent. Price was at 1.08500. Current price now is at 1.09728. We would all agree that this number is bigger than this number. True or true? So the question now is, and what's the difference between price? Like when we have a difference, when price moves, what's that distance called? Y'all learning, man. Those are called pips, okay? So the question now is, how many pips is this? Right? That's our question. Our question is from here to here, how many pips? What's the distance, okay? How many pips did it move? Here's how you calculate pips, okay? I'm going to show you how to do it on TradingView, but I'm going to show you how to do the math. It ain't hard, y'all. It's going to seem hard, but I promise you it ain't, okay? In regular pairs, which is most pairs, you always want to look at your 3rd and 4th number, okay? I'm going to make this even, y'all, I'm going to get fancy on for y'all tonight, okay? I'm going to make it fancy. I'm going to go 1.08500. Just give me a minute. I'm gonna use, make it in colors because I know we are visual learners. I'm gonna do it like this. So I'm gonna take off the 8. Just why I got that space? It have to be if Lovely is on here, y'all. Lovely, telegram me. Is there a way I can like turn the snapping off so that it's not? I can move it wherever I want to move it. Y'all see what I mean? Like I want it to move where I want it to move. Maybe I got to go to a lower time frame. Hold on. That might be it. Let's see. That might be it. I know y'all like, Sophie, why you even care? But it matters.
Lock the mic. Hey, Soph, I am on here. What are you trying to do?
I'm just, you see, like I'm trying to, it's like snapping to, like I can't put it exactly where I want it, like just the numbers. It ain't nothing big deal, no big deal. You see how the 5 is like touching the 8. I just wanted to be able to give it a little bit more space.
Oh, you didn't write it in the text box altogether?
Yeah, but I wanted it in a different color because I want to show them that the 3rd and 4th numbers we'll be looking at. No worries. Y'all can see this, right? No, I appreciate that. I think it's just me being, being extra. But y'all see what I'm talking about though, right? Like now the number is so, okay, let's go like that. Ignore the space, okay? I tried to unlock it, but oh no, snap. I'm gonna figure that out for next class, okay? I promise. But okay, so this is the 50, okay? So when you're calculating pips, guys, and it's a regular pair, you can almost always drop the last number. The four digits is what's important. So you always want to look at, okay? I think that's gonna confuse you. So let me go back. Sorry, guys. Sorry. Let me go back to what I was doing the first time. Y'all smart. So you always want to look, when calculating pips, you want to look at the third and fourth decimal place, okay? Third and fourth decimal place. So you can almost always just ignore the last digit, but third and fourth decimal is important, okay? Write that down. Which decimals are important when counting pips? Third and fourth, not first and second, third and fourth, okay? So if we're looking at this, okay, let's just do some math, okay? And I'm gonna make this in a different color. So let's do some math. In that lowest price, what's the third and fourth decimal place in that number? Drop it in the chat. Third and fourth. 5 and 0, okay? Exactly, 5 and 0. 8 is 2, so decimal place is 1, 2, 3, 4, 5, 0, okay? In that second number, what's the third and fourth decimal place? 7, 2. Good stuff, Tanea. Shouts out. So look, so these are the numbers that we want to look at, okay? So now we got something to consider, okay? This ain't the easiest example, but it ain't easy. So I might as well just show you how this thing works. So check this out. The difference, whenever we're calculating a difference, right? We want to know the difference between these. So really and truthfully, we need to subtract. So this current price really needs to be on top if we're doing the math. We need to know the difference between this and this. So if we're looking at the difference between 72, okay, and 50, what's the difference between 72 and 50? Okay, Tanea says 22, Tamara says 22, okay? Let's see. Right? Now, that was a trick question. So that you guys answered it the correct way, right? But check this out. That would have been the answer if this number was 08. Y'all know this is like, you have to, this is a hard one. You've got to think about it like, if price was, so let's do it in regular math. So if price was $1.85, $0850, right? And it went up to this. It went up more than just 22 pips, okay? This first number actually changed, because you see how it was 1.0850? If this had gone up to 1.0872, it would have been 22, but this number also changed, which means that this is actually 122 pips, okay? So I'm trying to figure out the best way to explain that, okay? Let's think. If any teachers on here, let's think about it. Okay, so price went from 0850, but this number changed as well, which is, back in school, we'd call it what? Like place value. Yes, Tamari is still in high school, so he remembers this stuff, right? It's place value. So this is 22. The difference between 50 and 72 is 22, but the 9, there's a difference between 8 and 9 as well, which is the difference of 1. So it actually went up 122 pips. Okay, try to think about it, just thinking about from here to here. Let me show you where 22 pips would have been. This might help just make you understand. I might not know the best way to explain it, right? Let's just say 22 pips would have been 1.0872, right? So that would have been about, let's draw it, 1.0872. This yellow line would have been 22 pips. Okay, from here to here is 22 pips. Y'all see that? 0800, okay? 0850, 0872. The difference, if you look at third and fourth digits, the difference between 50 and 72 is what? 22, which we had. But as you can see, our price went up to 1.0972. So you also have to add that this decimal place change. Guys, this is not always going to be the norm. This is a tough one. So if we can understand this, when I show you a second example, it's going to be easy. Okay. But check this out. In TradingView, you have this little ruler tool. I can literally click on the point and draw it to the next line, and this will measure it. It shows me that it's 121.9, which is basically 122 pips. Okay, it's 122 pips. So what's confusing us and what's going to confuse most people, and I totally get it, is this number right here. Because the second number changed as well. Okay, because the second number changed, it's like you've got this. This means that it's 100 plus whatever the third and fourth digit is. I know y'all confused. Is this making sense? Even if you don't understand 100%, are you conceptually getting it? Like, just think about it. The movement from here to here. If the movement from here to here is 22 pips, and we went all the way here, you know it's more than 22. It's actually 122 pips. Okay, but let me show y'all a better example. But you're gonna run into some of these type of things, and sometimes people get confused. But just know that if this was 1.0872, 22 pips, all you've got to do is subtract third and fourth digits. Okay, that's all, whatever. But if this first number is different, it's almost like, you know, like when we used to carry in subtraction in school. In the same way, the next digit over would be 1,000 pips. Exactly. So let's just say, guys, like what Tamari is saying, if this was this, let's say current price now was this, the 9 change and this change from a 0 to 1. So now you got 2. It'll be 1,122 pips because the numbers in the front of the decimals is changing. Let me show you another example. Okay. We might as well just conquer the hard things one time, right? Y'all cool with that? So let's look at an easier one. Let's look at this one. Let's say we're looking at price starting here and going to here. Let's just say we're looking for this movement. Let's say this is the movement we're counting. The bottom number is what? Our bottom number, our lower price is what? 0.67452. And our higher price is 0.67718. Okay, so let's say these are our two numbers, and we've got to calculate the difference in pips. Remember, here's what you do. Okay, here's what you do. Just look for the third and fourth numbers. So we can see that first number is the same, second number is the same. Boom, we golden. This is gonna be an easy one. You're like, all right, we good. So all you do is take that higher number, which is 71, which is the third and fourth digit, subtract it from the third and fourth digit from the other number. 71 minus 45 will give you what? 55, 65, 66, what, 26 or something? Okay, 26 pips. Let's check it. Use the ruler, go from here to here. It's about 26 pips. See, now that was a straightforward one, right? Because these numbers are the same. You're like, okay, that's the same, and I told you you could drop the last digit. So the only thing you care about really is these two numbers, and you just subtract it from each other. Does that make sense? Y'all follow me on this one, right? Y'all follow me on this one. Okay. And 90% of them are going to be like this. Now, the great thing about it is when we go for lots of pips, you know, and this first number changes. So let's just say hypothetically, this higher price changed to 68718. This number changed. So guess what? It went up. You just know that this went up 1. So you went up 126 pips. Y'all follow me? So because this place, I think back in the day, if Tamari, I think this is like tens, hundreds, right? Tens place, tenths, hundreds, something like that. Like it's something like that. So it's place value. So because this is in the hundreds column, you just add 100. Yo, I'm telling you, this isn't that important. Like counting pips is important, but to understand the difference in value, you just got to understand the concept. Okay. The most important thing that you need to know early on is how to calculate from an entry price to a stop loss, like in a signal. So you know what your stop loss is, so you know your lot size. Okay. But we're going to get there. Y'all kind of following me here. Okay. Just write on your notes. Okay. Counting pips like that. Now, you know, at least now you can be clear of a topic that maybe is a gray area for you. So you're not confused. You don't feel like you just don't know how to trade at all. You just, okay, I just don't really understand some of the pips. So now you can have intention with going to learn that or asking questions about that. Y'all follow me? Yes, no, maybe so? Y'all, we got an 8th grader on the call. So you see him, he knows his place value, okay? Tens, hundreds, thousands. I ain't talking. I've been out of high school 20 years, like, bro. So I know how y'all feel, okay? So guys, don't feel overwhelmed. Don't feel like, oh my God, I can't figure this out. I'm telling you, with practice and in application, you're gonna realize it ain't that hard, okay? It's not that difficult, all right? Now, so let's look at it. Let's look at it in practice, okay? Let's look at it in practice. So if you look at this, right? Prices moving with the long chart to help for visual, or that's too advanced. Yeah, no, that's advanced. That's advanced. I think no, that, yeah, gee, I feel you, but no. All right. So guys, okay, let's just, I'm just trying to get you guys used to seeing and just making it make sense overall. Okay. This ain't about like taking up a specific trade. It's about getting your eyes used to what's happening. Just looking at this chart right here, just looking at this little section, what direction does price look like it's going in? Drop it in the chat. I see Tamari says, Etta, what else? Guys, drop what you think. Only 4 people answers, 37 people on the call. What else y'all think? Okay, down, okay? Why do you think it's going down? Because look at it, guys. If you look, trading is like reading a book. We look from, like, right is where we're currently at, but you always want to look like left to right to see what's happening, okay? So if you look here, if you look left, the highest it went in a long time was about here, right? And price is now currently here. If price started here and now it's here, it's down, okay? It's down. Don't overcomplicate this thing, y'all. It started here and it went like this. It's going down. So now we know, okay, price is going down. So if you know it's going down, we're looking for what? If price is going down, what we say we'd be typically looking for? Price is going down, we're looking for sales, okay? Write this in your note. The trend is your friend. What does that mean? If price is going down, that means that the market is trending down. You want to trade with the trend, especially in the beginning. So if the market's going down, you shouldn't be looking for it to go up. You're looking to go down with it, okay? It's like You going down a water slide, you don't want to be trying to walk up the slide. You want to slide down, right? So you want to be going down, right? You want to sell. If you're trading HFX, it's a put, okay? So the trend is your friend. So if we're going down, we're looking for sales. Now we ain't even thinking about trading in this aspect right now, but I want y'all to just think about it. If price, okay, if price is here and it's going here, we know it moved a lot of pips. Would y'all agree? Because the distance from here to here is huge. Okay, so let's just use common sense for a minute. Let's look at the numbers. If the top number, okay, if the top number, the high is 1.14934, and the low is, let's see what the low is. The low is where this yellow line is. That's the yellow box. 1.09698. Okay, let's look at it. Let me try to space it out so it can look normal. Boom. So let's look at it, y'all. First, all the numbers are different. Y'all see that? So we already know, okay, third and fourth is pips, but there's going to be some more numbers in the front. Does that make sense? Y'all know it ain't going to just be like 93 minus 69, which is what? 30, what is it? Oh no, y'all do the math. Right? It's a lot, okay? So let's do it. Let's see. 93. So if we look at third and fourth number first, so 93 minus 69, we know it's like 24. Okay, so we know that part is 24. But we also know there's going to be some numbers in front of the 24 because our second number is 49. Okay, so the difference between a 4 and a 9 is about 5. Right? And then there's a difference here is 1. So I might be wrong, but let's just see it. Let me see. I'm thinking the difference between the 4 and the 9 is 5. And then we got a 1. But this is like, this number here is way more. Hold on, let's see. I think this is like way more. Then I'm gonna figure the math out. Yep. 524. So it is 524. So, okay. So I didn't have to move this because this, okay, so this is a hard one again, but it goes back to math class, y'all. Why was I wrong with that 1? I just looked at this and saw 1, but right, y'all know, like when you have to borrow, like you have to, this would have turned 0. So let's see, 5, so it's 5, 969. I wish I could figure out a good way to teach this. Y'all, this will be a learning and process. See, this is like 500 pips. Why do I know that? Because it's like 969. I wonder if it's a way I could do it on the calculator. Hold on, let me see. 11493 minus 1.0969. 524. So it gives you the decimal, it gives you the answer, but it has a decimal place, but that's gonna throw us off. Yeah, like it's like canceling it out. I got to figure out a better way to teach that, y'all. But I think some of y'all understood, third and fourth decimal number, if all the numbers in front are the same, it's really easy. If the numbers in front is less or different, you know that it's more or less. But just know that on TradingView, use your measure tool, this ruler tool right here, and you can just literally click, draw, and measure, and it'll tell you the amount of pips. So when we send out trade markups and like different things, you don't have to like be like, oh my God, how much pip? Just draw it and measure. My thing is like, I live in a world where, and maybe y'all can correct me if I'm wrong. That's why I'm not an educator. I'm just teaching what I know, right? I'm just teaching what I know is, I believe that if we have tools that help us get the job done, like it's like school. Why do they make us memorize the periodic table when we got computers and we can just Google it? Like, let's just Google what we need to be able to solve the problem. Y'all feel me? So it's like that. It's like, okay, we got a tool that measures pips for us. It's great in theory for us to know how to count pips. But if we could just measure it, just measure it. All my educators on the line are like, Sophie, what are you saying? No, that's just my philosophy. Okay. But have you guys learned something so far? Yes, no, maybe so. There's one more thing I want to cover. One more thing I want to cover. Okay, the last thing I want to cover tonight, okay, and this is where we'll end, and then we'll pick up again tomorrow. If you're all down, we can pick up again tomorrow. I know Kevin Howell is doing a boiler room training tomorrow on inviting how to get people to the calls, but I want to, this week gonna be fundamental week, okay? If y'all cool with it, I'm with it, all right? So I want to talk about lot sizes, not so much in a trade, but just what a lot size is and how it equates to money, okay? This is important. All right, so we understand pips is the distance, okay? So if this is the distance that price is moving, we now want to know, okay, when we place this trade in our MetaTrader 4 or on our trading platform, how does that equate to money, okay? Every trade, something that's required is something called a lot size. This equates in Forex trading, also in crypto trading, to your risk, okay? This is similar to if you trade HFX. We got any HFX traders on the call? HFX, your risk amount is just your dollar amount you're willing to risk. So in HFX, if you're willing to risk $5, you just put $5. You're willing to risk $50, you just put $50. In Forex, in crypto, in MetaTrader, which we call leverage trading, we use something called lot size, which is a decimal place value that's going to equate to risk. And I'm going to make it make sense. Okay. So the smallest lot size that you can use, okay, is 0.01. Now I got an easy formula for you to equate that into dollars and cents. Okay. Whatever lot size you're using, you multiply it by 10 and it tells you how much money you make per pip. Okay. So I'll make it make sense. Okay. I'll make it make sense. So 0.01 is the smallest lot size you can use. Okay. Does that mean that it's a penny per pip? No, you multiply it by 10. Now it's 10 cents per pip. So what that means is, guys, if you're using a 0.0 lot size in a trade, you're actually going to be earning or losing 10 cents per pip. So let's just use this example. This particular, area right here is 524 pips, right? We just figured that out. We just measured it. So from here to here is 524 pips. Y'all cool with that? So now let's look. So if we were in a trade and we got this whole move for 500 pips. If you were in for a 0.01 lot size, you're earning 10 cents per pip. So if you're earning 10 cents per pip and you caught a trade for 524 pips, how much money would you have made? I see Tamari got it, but I want someone else to go ahead and do the math, right? If you're making 10 cents a pip and you get 524 pips, how much money you make? Guys, just 524 pips times 10 cents per pip, which is do the math. Y'all ain't doing the math. The math ain't right. Boom, Latrice got it first, and Zanika. It's actually $52.40. Okay, because 10 cents a pip. The math you guys were doing was 1 cent a pip. If you got a penny for 524 pips, that's 524. But it's 10 cents per pip. Okay, 10 cents per pip. So 524 times 10 cents is $52.50. Who wouldn't mind being in a trade, catching 500 pips, let's say over the course of a week? Even at the smallest lot size, you made 52 bucks. Right? That's free money. Okay. No one would mind. Now let's up it. Okay. So just always know that whatever lot size, you always multiply it by 10 to figure out how much you make per pip. Then you multiply it by the amount of pips you're aiming for, and that's going to tell you how much you can make. Or you multiply by where the stop loss is, the amount of pips the stop loss is going to tell you how much you're going to lose. Okay. So let's just say, same example, 524 pips. Let's say this time you a big baller and you went in for 0.2, a 0.20 lot size. Okay, how do you know what you're aiming for? Well, that's when, like, if a trade signal comes out and you see when we give the TP, now you'll be able to measure, okay, this is a 30 pip TP. I'm going in for a 50 cent a pip. Okay, this is gonna make me this amount of money because you're going for 30 pips. So that's determining if it depends on your trading signals that's given out, which most of you guys will be doing in the beginning. But after you start marking up your charts, you're gonna understand, you're gonna start to find levels that you think is a TP, and then you can measure it yourself. And I'll give you guys, we're gonna look for one live example after this part. Okay. So if you're doing 0.20 a pip, okay, 0.20. 0.20, guys, in lot size, you got to be careful. I ain't saying 0.02, I'm saying 0.2. This is my lot size, not 20 cents a pip. My lot size is 0.20. How much am I going to be making per pip? Boom, my boy Jabari got it. Okay, 1,048. How? Because the lot size, you multiply it by 10, that tells you how much per pip. So 20 cents times 10 is $2 per pip. Now you got 524 times $2. You just made yourself 1,048. Guys, lot size, nothing in trading changes except your lot size. So think about it. Let's just say this was a trade idea that we sent out. Now let's say it hit TP and you entered in your account for a 0.01. You would have made $52, but I may have entered in my account for 0.2 and I made 1,000. Same trade, different lot size, totally different profits. Now you can't just go jump in the trade with a 0.2 on a $100 account. You know, your account balance matters. And we're going to talk about that tomorrow night on how to know what lot size to use to be able to, based on your account. Okay, based on your account. So let's just move this up. So we're both in the same trade, but because we're using different lot sizes, our profits is totally different. Okay. And the thing that determines what your lot size is how much stop loss you've got. Okay, how much stop loss you got? I should show y'all this just one time. I should just show it to y'all one time and call it a day. Okay, write this formula down. And we're gonna have a call tomorrow on this, because this alone you need like an hour. Okay, but just write the formula down. Here's how to calculate lot size. Okay, formula to calculate lot size you should use. Okay, guys, the lot size you should be using in trades is specific to you, depending on how much money is in your trading account. Just because we're all entering the same trade don't mean we should all be entering with the same lot size if we don't have the same account balance, and our risk tolerance may be different. So here's the formula, okay? Y'all, some people on this call, if this is your first time, you probably never seen this formula before. My first year and a half trading in this academy, I was doing lot size wrong. And I used to be wondering, why in the world am I blowing accounts? I thought I did it right. No, this is the formula. So shout out to Doc for teaching me this formula. Changed my life, changed my whole trading game. Now I can literally get into a trade and I don't care if it hits stop loss, because I know before I get into the trade, how much I'm going to lose. If you trade HFX before, you know, like if you know you put $10 in risk amount, if you don't clear, you lose 10, and like you willing to lose that. Now I know how to get that same feeling with MT4 because I understand how to calculate lot size. This is going to be a game changer for a lot of y'all. Y'all going to be like, I can't believe I didn't know this. So write the formula down, okay? Formula to calculate lot size. Risk amount. Okay, your risk amount. And that's going to be in dollars. Okay, divided by, I guess I should draw it like this so y'all can understand it more. Divided by stop loss in pips times 10. Promise y'all, I'm gonna make it make sense. When y'all see this, some of y'all who've been trading, my more experienced traders on the call, y'all gonna be like, yo, this is gonna change my life. Okay. Check it out. Okay, this is the formula. Write it down, screenshot it. Y'all gonna thank me later. Okay, this is how you calculate your trades, like what lot size you should be using in a trade. So in order for you to calculate lot size correctly, there's a couple things you need to know. Okay, you need to know what you're willing to risk, your risk amount. Okay, now let's break it down. Let's say it all depends on your account balance. So let's just say you have $100 account balance. Okay, you got $100 in your trading account. You've got to determine what risk amount you're willing to risk in a trade. Okay, usually our educators say between 1 to 5% of your account. It's up to you. You could choose whatever, 1 to 10%. I'm a little risky, I ain't gonna lie, y'all. Sometimes I be risking 10%, but 1 to 5. Let's do the right things. Okay, 1 to 5%. You got so on a $100 account, 1 to 5% is what? That's between $1 and $5. Y'all follow me so far? Yes, no, maybe so. Okay, so let's just say you're on the call and you're like, okay, Sophie, I'm willing to risk 5% of my account in any one trade. So let's just say you choose 5%. Okay, that means you're choosing $5. Okay, so in this formula that we look here, you want the risk amount in dollars. So the risk amount in dollars is what? Based on what we just decided. Drop it in the chat. The risk amount in dollars is how much? $5. Boom. Okay, so that's that. $5. Okay. Now, let's just say we have a trade. So you also have to know, whenever you're doing this, you have to know how the distance of the stop loss in any trade. So if you guys see in the signals group, when we send out signals, we always provide a stop loss. And I try my best to put how much pips it is, just so y'all don't have to think about it. But guess what? Now that you know how to just measure pips, I don't have to put it, but we're going to get there. But for now, you're new. Let's just say, okay, let's just say we're in a trade idea where the stop loss, okay, the stop loss is 30 pips. Okay, let's just use that as this is just for our example. Okay, so our stop loss is 30 pips. So we already understand that we want to risk $5. That's what we're willing to risk. Now in the formula, what else do we need in the formula? We need risk amount, which we found, and we also need stop loss, right? So what's our stop loss for this particular trade if this was a hypothetical situation? What's our stop loss? Okay, Latrice got it. Our stop loss is 30 pips. And what does the formula say? 30 pips times what? 10. Okay, so 30 pips times 10. 30 pips times 10. Let's just do the math. I'll do it here so we can just save. So 30 pips times 10 is what? 300. Boom. So our formula says we divide 5 divided by 300, which gives us what? $0.0166, right? 0.0166. So we don't round up, okay? In lot size, guys, like, so if it's 0.0166, we're using a 0.01, okay? So this basically says to us, you can use a 0.01 lot size, Latrice, in this trade, right? And you know that if it hits stop loss, if it hits your stop loss of 30 pips, you're gonna lose $5. That's what you was willing to risk. That's the worst case scenario. You can go to sleep. Now you don't have to be glued to your phone like, oh my God, how much am I gonna lose? You know it's predetermined before you get into the trade. Does that make sense to everybody? So once you understand how to use this formula and you know how much you're willing to risk, This just tells you what's the correct lot size to use so that you never lose more than that risk amount in any given trade. Okay, let's change it a little bit. Then I'm gonna make it a little sweeter and then we're done. Let's just say our stop loss. So this is right. So Latrice, great job. Do you guys follow me or y'all lost? If y'all lost, it's okay. It's just practicing this formula. Just know this formula. So always know you determine your risk. The trade idea is going to tell you what the stop loss is. Once you have those two variables, you can calculate lot size. And if the trade hits stop loss, which is the absolute worst thing that can happen in a trade, you know it's never going to be more than what your risk amount is because your risk amount gave you the lot size. Follow me? Only 2 people say yes. I know it's a long training, y'all, but this is foundation. Sometimes the foundation take a little longer than 45 minutes. But we basically done. Okay, let's do another one. And I want y'all to see how stop loss matters. Okay, let's say the trade idea, this time the trade idea, the stop loss is 10 pips, tight stop loss, but you still only want to risk $5. So let's plug in the numbers. Your risk amount is still the $5, but this time your stop loss is 10 pips instead of 30. So 10 pips times 10, so that's now 100. So now somebody do 5 divided by 100. So what lot size can you use? Same risk, smaller stop loss. What could your lot size be? So now you can do 0.05. So now 50 cents a pip. So guess what? Because it's only 10 pips, it's a shorter stop loss, you can risk more because now 50 cents a pip for 10 pips still is only $5. But if this was 30 pips, you needed to risk less so that when it hits 30 pips, it's the $5. Does that make sense? So let me show y'all, and then this is the last part. So if our stop loss is 10 pips, let's just think about it if we're thinking in terms of TP. Like, so say we had TP1. Let's say the TP1 for a trade was 10 pips, TP2 was 30 pips, and TP3 was 50 pips. Okay, so let's say this was the trade. The stop loss is 10 pips, and these are our targets. So guys, we know if you're using a 0.05, so let's put in everything we learned today. So if your lot size is a 0.05, how much is that per pip? How much is 0.05 per pip? So oh, good job, Tamari. It's 50 cents a pip, guys. Just always, your golden factor is always 10. So 0.05, all you do to figure out how much it is per pip is just multiply by 10. Okay, so times 10, that's going to show you that it's 0.50, 50 cents per pip. Okay, 50 cents per pip. Okay, so our lot size tells us it's 50 cents per pip. So that goes on to tell us if it's 50 cents per pip, if it hits stop loss, okay, if it hits our stop loss, 50 cents per pip times 10 pip is how much? Is what? So if it hits our stop loss, so worst case scenario, it hits our stop loss, we lose $5. Okay, you -5 because that was predetermined, right? We know that. That's where you was willing to risk. Now let's look at the upside if it hits our targets. So if it hits TP1, guys, right? 50 cents a pip for 10 pips, we just said, now you're up $5, right? If it goes for 30 pips, how much money are you up? Tanea is on fire. That's what I'm talking about. Good job, Ada. You're up $15 because 30 pips at 50 cents a pip. Now you are $15. Okay, and let's say it hits TP3 for 50 pips. Martine, good job. You're up $25. So guys, here's what we mean when we say, hey, okay, so you could be in this trade. You know that worst case scenario, you're going to lose $5 if it hits stop loss. But if it hits TP1, you're going to earn 5. If it hits TP2, you're going to gain 15. If it hits TP3, you make $25, but you only risk 5. So if this was to hit TP3, it's a 1 to 5 risk to reward. You're risking 5 to gain 25. I would do that all day. You're only risking $5 to gain $25. But the only way you can trade stress-free is by understanding this formula, because you know you were only willing to risk $5. Does this make sense? So if this risk amount changed, let's say you were willing to risk $15 and we got the same 10 pip stop loss, right? Let's say you risky. You like, man, I'm willing to risk $15 in this trade. Okay, 10 pip stop loss, 15 divided by 100 is what? .15. Good job, Latrice. So 0.15 times 10 is what? How much per pip? Latrice on fire. I think she got it. It's $1.50 per pip, right? So if it's $1.50 per pip, okay, and we hit stop loss, which is our 10 pips, you lose your $15 you were willing to lose. But let's look at our profits now. So we know if it goes for 10 pips, we're gonna make that $15, right? So let's make this clear. $15. If it hits 30 pips, what's the number? If we make it $1.50 per pip, and we go for 30 pips, how much money we make? Martine got it too. Lolita, you got it, girl. $45. Okay. If it hits our TP and we go for 50 pips, how much money we making on this trade? $75. Who on this call? What part you get lost on, Latrice? The money part?
I get lost on. I get lost on trying to figure out the pips. I'm like, okay, when you said take profit at 10 and you said it's 5, you changed it to 15, 45, 75. It was 5, 15, 25. And I was like, shoot, how did they get that?
Oh, because we were using 50 cents per pip the first time.
Okay, so it's 50
cents.
cents
To now $1.50 per pip.
Okay, 50 cents.
Right, yeah. So the first example was 50 cents per pip.
Okay.
So that's why we got $5, $15,
50 cents per pip. Okay.
But now, because our lot size is higher, our profit is higher. So it's $1.50 per pip. So now when we go for that 50 pips, 50 times $1.50 will give you $75 profit.
Okay.
Sure. Talk to me. You sure? You got it? No. Okay, I'm gonna do one more. Okay, so here's what I will do. Here's what I'll do just to make it cool for everyone. We're gonna look at a live chart really quick, and let's just see if we can see a potential setup. I wonder if I still got it. Oh no, I think I deleted it. I was gonna show you guys a setup I did last night, like a trade I marked up last night, and it hit TP like it hit. But let's look for something new. Someone drop a pair you like, and we're gonna look at it real quick. And we're gonna see if we can find an idea, and then we can show stop loss, and we're gonna calculate what our stop loss would be, what our take profit would be, and then we can just do one example, but in real life. Euro USD. Let's look. Boom. So let's clear off the chart. So y'all, I ain't like looking at it in a factor for us to like train on it. I'm just looking to see if I can see anything. Okay. So I'm just looking at it on the daily from here. I can see price was going down. Boom. It came down to the low here. So like, I'm just looking at it quick for us. So price came down. Price was moving in a downward direction. It came up, came down. Look like it's moving up, right? So in the last couple of days, this was the high right here. So I'm just looking at this area between here, this low and this high. Price is currently here. So let's drop down. Boom. Price came down and wicked up, came up to the top here, rejected. Boom, it's kind of consolidating. Be in a downtrend. It's looking up, down. Hang on. So price, let's just see. Don't mind me, guys. I'm just looking, okay? So let's go from the low to the high. Price is right around the 618. It's pushing up. Just up, down. So I believe, okay, just looking at it quick, price is moving, like right now on this, price looks like it's starting to move in the upward direction, okay? It went here, came back down. So it's low, high, low, higher, low. So I'm looking for a higher high. So I'm looking for price to continue to push up. That's just on this quick analysis, right? So let's just look real quick. Boom. Let's just look. Let's see. Hold on. Boom. Price come here. Let's come here. Okay. Up, down. Yeah. So I'm looking for price to move up. So I'm looking for buys. Okay. So up, down. Price is moving up. Okay. I expect it to make a higher high or at least reach back to this high. That's just looking at it for me. But the question is, when do I get in? Should I jump in right now? I don't know. Let's see. So let's go here. Let's go here. Okay, let's look in between here. So price came here, came up, came here, pushed all the way up, down, rejected, boom, it's pushing up. I will not be looking to get in this trade right at this moment. What I'm personally going to be looking for is two things, okay? And I'm just going to do an example, but I just kind of giving you an analysis. If price gets back to around this level, you see it came here, rejected, came close, rejected. Over here, it came here, rejected. This is a point of interest for me. So if price comes to this white line and it rejects, it's probably going to fall. We could look for like a small sell, pullback. But if price breaks this line, it's going to keep going up. So I'm going to send an alert around this area. So when price reaches this area, if I'm not sleeping, it'll alert me and I'll look at the screen. Okay. But let's just say, so for me, y'all, just looking at this is my area here. Price rejecting around this area too. So cool. So my area of interest in this trade, y'all, right now is right here. This between this little area right here. But look here, where price is at right now, it's in the middle of both of my areas. So I'm not going to get in the trade. That's the quickest way to lose your money because you don't know if it's going up or down, right? I need price to get closer to this area and see what it does before I can get in a trade. If it comes here and it rejects, I know it's going to fall back down towards this area. If it breaks, it's going up. Okay. But if the price comes back down here and it gets around this area, it's probably going to bounce up and I can get in. So I'm really looking for a pullback. So guys, what I really want to see here, okay, I want to see price go from here and come here. And when it comes here, this is a potential entry to get back in because we're looking for buys. Does that make sense? I know probably y'all know, but this is what I'm looking for. So if that's a particular trade idea I'm potentially looking at, here's a potential idea. Okay, here's a potential idea. This is what, 30 pips, 35 pips, that's big, but okay, it's cool. So a potential trade idea could be like around here, a buy limit, like when price gets around here. My stop loss would be below this line or on this line. And my target is going to be, let's look. You know, you're like, what? But I'm just looking for ideas. So low to high, low to high. So I know it should be at least back up to this line. because it should create a higher height, but this is the last height. Boom. So that's a potential idea right here for me. So if you look at this, this is a 35 pip stop loss, but a 187 pip take profit. Okay. So this is a long-term trade. This might have to take all week to play out. Tamari, shouts out because this is a good idea. So I'm gonna monitor this. But let's just look at it from what we learned tonight. Okay, just based on stop loss. So if I was to send out this trade idea, it would look something like this. It look like this. Euro USD buy limit. Because right now, price is here. I needed to come back down to my zone and then activate for a push-up. So it'll be buy limit. Entry at 1.09335. Stop loss would be 1.08980. And we're going to measure it so we can see the TP, and TP would be 1.11210. Okay, this is a swing trade. So this is a potential idea, y'all. So y'all might want to screenshot it. I'll monitor it throughout the night, but this looks good. Okay, it looks good because basically it's saying like when price gets back around here, it should push up. But worst case, it might play around this area, but it shouldn't break. It shouldn't go below. So my stop loss is going to be below these last lows. Okay. I'm actually going to change it to 7.0. Okay, to 7.0. Okay, cool. So let's just say this was our trade. All right. Let's measure the stop loss. So we got to see the stop loss. So if this is our entry and this is our stop loss, that's 36 pips. Okay, 36 pips. And our TP, how much I said it was? Our TP is 187. So let's figure out the money. See, this is where you're able to predict the money, right? This way y'all could be excited. You could be like, okay, I don't need to take another trade for the week if this, if this plays out. Okay, so let's do the math. Let's go back. So what kind, y'all want to use the $100 account balance again, example? Because I think that's what most people probably got $100 in their trade account, right? Yes, no, maybe so. Okay, $100. All right, so I'm gonna do that down here. All right, so $100 account balance. What do y'all want to risk? How much you want to risk in this trade? What's your risk amount, dollar amount? Okay, Latrice says $5. All y'all say $5? Okay, $5. 2 people say $5, so y'all in. 5%, great. So we're gonna risk $5, okay? Risk amount is $5, right? So now we got to use the formula, okay? We have to do risk amount, so $5 divided by stop loss times 10. So what's the stop loss in this trade I said? Stop loss is 36 pips. How do I know that? Because we told you in the idea. Okay, you ain't got to calculate it. You just got to plug and play. So 36 times 10 is 360. So 5 divided by 360. Pretty sure it's probably 0.01. .01, right? Okay, so your lot size for this trade, if this is you cannot get in this trade for more than 0.01. Okay, because so less that. So your lot size is 0.01. So how much per pip is that? Boom, 10 cents per pip. Love it, Martine, you got it. Okay, 10 cents per pip. So now let's do the math. Let's do the math. So if our stop loss, okay, if this trade hits our stop loss at 10 cents a pip and it's a 36 pip stop loss, how much would you lose if it hit stop loss? $3.60. See, Latrice, you say you didn't get it. Now you got it, right? $3.60. Okay. So guys, if you enter this trade, the worst that you can put this trade in with the right lot size, you could go to sleep. You'd be like, if it hits stop loss, who cares? I didn't even lose 360. I was willing to lose 5. I didn't even lose as much as I wanted to lose, right? So you're good. But let's look at the opposite. If this trade hits TP, okay, if it hits take profit, how much money you make? How much money you make? $18.70. So in this trade, if you take this trade right now at a 0.01, you know you're risking $3.60 to make a potential $18.70. Who wouldn't do that? It's a 6x return in your sleep. And if it hits stop loss, so what? It's still within your risk tolerance. Does this make sense? See, when you understand, guys, how to calculate your stop loss, you're not stressing out watching your phone because you're like, I'm losing all my money. You shouldn't be losing all your money because you should have known how much you was going to lose before you entered the trade. So that's why we say don't over leverage, because let's just say you didn't understand this and you went into the same trade with the same $100 account. You don't understand lot size. And you just like, you know what? I'm going to do a 0.05 lot size, which is 50 cents per pip. Right? 50 cents per pip. Now, that 36 pips at 50 cents per pip, that's $18 a year account gone. Right? Now, if it hit stop loss, if it hit TP, you happy because that's $93. But you can't look for how much you can make. You got to make sure you're protecting your capital and making sure you're not losing more than you're willing to lose. Why do you say take a smaller lot size or larger lot size? Because sometimes when we give a trade, it might not just be a number. It might be a zone. So it might be between these two, this zone. So of course, if you're taking a higher entry, you have a longer way to the stop loss. So it's going to be more pips, but the bottom is going to be shorter. So you want to if the bigger the stop loss, the smaller the lot size you want to use. The smaller the stop loss, the bigger the lot size. So I would say if you're going to enter at the top of the zone, that means you're going for, let's just create an example. Let's just say what I just gave you was the bottom of the zone. And you enter at the bottom of the zone, okay, you know you're going for 36 pips. But let's say you take that top entry. Now you go for 46 pips. That's going to affect the lot size. You understand? Because now it's 10 pips further away. So you got to factor that into your lot size when you're taking the trade. So if you're entering at the top, you want to go for smaller lot size because it's a bigger stop loss. If you're entering at the bottom, you can go to your maximum lot size. See, guys, because what I'm saying is, if a 0.01, it doesn't matter. You can't get smaller than that. But let's just say your factor was a 0.05, and you can get in twice. You may want to get in for a 0.2 at the top and a 0.3 at the bottom. You just can't go over the maximum. And I'll talk about that tomorrow, because that's like, I don't want to confuse you guys with like combining entries. But did this help? Did you guys learn something tonight? If you're on the call and you feel like you learned something tonight, you're like, okay, something is clearer. Okay, it makes a little bit more sense. I kind of get a better a better grasp of what's happening. And like, okay, I see why some things are confusing to me, because I didn't understand some of this foundation. Love it, love it. I see some. Okay, cool, good stuff, good stuff. So I did record this.
Yes.
Go ahead. I'm sorry.
I said, yes, I learned a lot. Thank you.
Good stuff, good stuff. So I did record this session. I know it was long, but I think it was needed. If you guys think a session like this was needed, drop some 9s in the chat. If you think like this was like overdue, like you're like, yo, this is the basics, but I needed this, right? Awesome. Say the pips ain't pitiful no more. Awesome. And I'm telling you, this whole week, guys, if you could plug in. I'm going to make sure like we go through the foundation of everything, where by next week when the markets open, you like confident, like, yo, I'm excited to take, because I know a lot of times, a lot of you aren't trading because you just ain't confident enough. You know, you kind of feel scared. Like you're like, I ain't really know what I do, is I'm just not going to do it. And, you know, that's not what we want. We want clarity. We want understanding so we could get to this bag. We can secure the bag. All right. So I'm going to post the recording on YouTube. I'll upload it tonight. Tomorrow night, Kevin Howell has the boiler room training, which is going to be how to invite. Actually, guys, we might have to skip to, I'll figure it out because we got locker room tomorrow night too. So that's 10 o'clock. So that it may not work. We may have to resume this on Wednesday. Okay. Wednesday, 9 o'clock works for everyone. Let's do Wednesday at 9. So use tonight and tomorrow to review today. Go on and just write some numbers, look at, like, calculate some pips, go on TradingView, draw some lines, just play with this stuff, because the only way you learn is through repetition and through practice. And the more you do it, the more frequently you do it in a shorter time frame, it's going to stick. If you look at it today and then you don't look at this again till Wednesday's class, you're going to forget half of the things we talk about today. So use tomorrow to really, you know, drive home the concepts. Make sure you understand it. It's cool if you mark up something and like drop it in the group and say, hey, is this right? Let's utilize each other as a resource, man. Like this year, no one gets left behind. Everyone's securing all bags. We're not just focused on building the business. We're making sure everyone learns the skill, how we get paid in the markets. It's $6 trillion every day moving. Ain't no reason why each of us on this call can't get 1,000 a day. I mean, I'm just saying, I don't know if y'all agree, but that's how I feel about it. All right. So I appreciate y'all, man. I can mark up in TradingView using what you drop. Boom. Perfect. Yes, I can send you the recording. I'll drop it in the groups. Make sure you guys get it. I'm going to keep an eye on this Euro USD. We are in an overall, I'll close with this. We are in an overall downtrend, but we are in a retracement right now. So I'm expecting overall, I'm thinking from where I marked this up, I'm expecting price to go up to this level. And when it hits up here, it's gonna massively tank to the downside. So I'm looking for the move up and the move down. Okay. But I'll monitor it. If it doesn't happen overnight, I'll send an idea out in the morning. But you guys can definitely feel free to take this idea. Just use the right risk tolerance. If you're willing to you're willing to lose $5 while you sleep to gain 20 while you sleep, y'all, that's a win. That's money in your sleep. Okay. Just don't over leverage. Just don't go crazy. Our goal is to preserve your capital and not lose your money. All right. So I love y'all, man. I hope this was valuable. I learned a lot, you know, doing these calls. And if you're on here and you're comfortable with these fundamentals and these basics, this is a call I want us to start running a lot. So if you're down to help with the call, definitely, you know, let me know. I'm more than happy. So I don't have to do it all the time. I would love to develop and help you guys do it. And if you're on here, y'all, make sure you get on the waiting list for Run the Play training camp. Okay. Tickets are dropping this week. You want to be on that list. You can get the early bird special. Y'all, we going in that conference 200 deep. Okay. 200 deep. 30 of us on this call. We're already 1/6 of the way there. And the tickets haven't dropped yet. And if everyone on this call is intentional about being there and not coming alone, it's done. All right. Y'all have a good one. Stay blessed, Coach. I appreciate you. Thanks for, passing it out to Dream Team Worldwide. Y'all know what the vibes is. If you haven't checked out my vlog from the recap of this weekend, definitely check that out. Tell me what y'all think. Leave some comments. Subscribe to the YouTube. We're going to blow this thing up and we're going to make this thing go viral for sure. All right. Y'all have a good night. Take it easy.
Let's go.
Let's go.